Why e-commerce businesses need specialized credit solutions. Your e-commerce brand doesn't spend like a traditional company. You move quickly, manage tight margins, and deal with expenses that shift week to week. You often pay for inventory before you earn revenue. That means cash goes out long before customers place their orders. If your credit card has a static limit or short repayment window, you may need to delay inventory purchases or dip into reserves to keep operations moving. Advertising is a significant part of your operating costs. Most e-commerce brands spend 10% to 20% of their revenue on digital marketing. That spending happens daily across platforms like Meta, Google, and TikTok. Without clear visibility into these online transactions, you can't easily track campaign performance or control spending. You may also work with international suppliers or serve customers in multiple countries. Many traditional cards charge foreign transaction fees of up to 3%. Over time, that directly hits your profitability with no added benefit. If your card can't flex with your business, it's holding you back. A credit solution designed for e-commerce gives you the tools to stay liquid, organized, and in control so you can keep growing without friction. Your credit card solution should support daily operations, improve cash flow, and give you control as you grow. Look for revenue-based credit limits. Your business needs flexibility as it scales. A card that adjusts your credit limit based on sales activity allows you to spend in line with demand. This helps you stock up on inventory, invest in ads, or handle unexpected costs without getting blocked by a fixed credit cap. Avoid foreign transaction fees. If you pay international suppliers or use global tools, foreign transaction fees can eat into your profit. Some cards charge up to 3% on every overseas purchase. Choosing a card with no foreign fees protects your margins and keeps your costs predictable. Choose a card that rewards e-commerce spending. For most online businesses, key expenses include shipping, software tools, and digital ads. In fact, advertising budgets have increased by 7% over the past 3 quarters. A card that gives cash back or credits in these categories helps you lower your cost of doing business. This puts money back into your operations without requiring extra effort. Make sure you can track expenses in real time. With frequent purchases across multiple platforms, visibility matters. Real-time payment tracking lets you see every charge as it happens. This helps you stay on budget, spot issues quickly, and make decisions without waiting for monthly statements. Use built-in spend controls to stay in charge. You may not have time to approve every card transaction, but you still need to know where the money goes. Spend controls let you set limits by user, vendor, or category. This keeps your team on track while reducing risk and maintaining oversight. Look for seamless integrations with your tech stack. Manual work slows you down. A card that integrates with the platforms you already use will help you reduce errors and save time. You get cleaner books, faster reporting, and fewer reconciliation headaches. Make sure the card supports multiple users with permission settings. As your team grows, roles become more specialized. You need the ability to give access without handing over full control. Role-based permissions let team members spend where needed while keeping sensitive data and controls in their hands. Choose a card with flexible payment terms. You often pay for inventory or ads before you earn from sales. A card that offers extended payment windows helps you manage that gap. This allows you to keep operations running smoothly without dipping into cash reserves. Best business credit cards for e-commerce. Not all e-commerce business owners spend the same way. A brand managing global suppliers has different needs than a startup focused on digital ads. The right credit card depends on how your business operates, where your money goes, and how fast you need to move. 1. Ramp Corporate Card. Best for optimizing e-commerce operating costs. The Ramp Corporate Card is built for fast-moving online businesses that need control, visibility, and efficiency in their spending. For e-commerce companies dealing with frequent purchases and tight margins, Ramp simplifies expense management while keeping costs down. It functions as both a charge card and a finance automation platform, helping you make smarter decisions with every dollar spent. Earn cash back on every transaction without worrying about rotating categories. Get real-time visibility into spending across your team and vendors. Issue unlimited physical and virtual cards with custom controls. Eliminate annual fees, foreign transaction fees, and employee card fees. Connect Ramp to QuickBooks, Xero, or others for clean books and faster close. Spot duplicate subscriptions and vendor overlaps with built-in
cashback on eligible purchases like internet, phone services, shipping, and gas. Get 1% back on all other categories without limits. Receive a $500 welcome bonus after spending $4,500 in the first 150 days. Enjoy 0% intro April on purchases for the first 15 billing cycles. Redeem cashback as a statement credit to lower your monthly balance. Pay no monthly fee, which helps reduce overhead costs. Drawbacks. Limited to specific 3% categories without elevated rewards for ads or inventory. Intro April is temporary, and interest applies after the first 15 billing cycles. No built-in spend controls or finance automation features. This card is a solid fit for e-commerce businesses with consistent monthly spending in service categories like internet, shipping, and software. If your operations don't rely heavily on paid ads or international suppliers and you're looking for straightforward cash back with no annual fee, this card delivers solid value. 3. Chasing Business Premier Credit Card. Best for high-volume transactions. The Chasing Business Premier Card caters to e-commerce businesses that make large-scale purchases. If you regularly place substantial inventory orders, invest heavily in digital ads, or manage high-ticket vendor payments, this card gives you strong cash back on big transactions. It rewards high-volume spenders who seek a simple, value-driven return without the hassle of managing rotating categories. Key benefits. Earn 2.5% cash back on purchases over $5,000, which can add up quickly for bulk inventory or ad buys. With no cap, get 2% cash back on all other business purchases. Access a $1,000 welcome bonus after spending $10,000 in the first 3 months. Use the card anywhere Visa is accepted, with no foreign transaction fees. Receive purchase protection and extended warranty coverage on business-related items. Drawbacks. Requires full payment monthly. Carries a $195 annual fee. Lacks built-in expense controls or e-commerce accounting integrations. This card is a strong fit for e-commerce businesses that regularly make large payments, whether for ad campaigns or software subscriptions. If your business consistently spends more than $5,000 per transaction, the high cashback rate can deliver real value month after month. 4. Capital One Venture X Business Card. Best for managing international suppliers and travel. The Capital One Venture X Business Card is built for e-commerce companies with international reach. Whether you're attending trade shows, visiting suppliers overseas, or managing cross-border logistics, this card helps you earn travel rewards while reducing fees that cut into your margins. It blends premium travel perks with flat-rate rewards, making it a strong option for businesses with global operations. Key benefits. Earn 2x miles on every purchase, with no caps or categories to track. Receive 10x miles on hotels and rental cars booked through Capital One Travel. Get a 150,000-mile welcome bonus after spending $30,000 in the first 3 months. Pay no foreign transaction fees, which helps lower international supplier costs. Access airport lounge benefits, cell phone protection, and travel insurance coverage. Drawbacks. Requires high spend to unlock full value. Comes with a $395 annual fee. Rewards are travel-focused, not cashback. This card is a strong fit for e-commerce businesses that travel frequently or manage global supply chains. If you attend sourcing events, pay vendors overseas, or ship internationally, the travel benefits and fee savings make this card worth considering. 5. Amazon Business Prime American Express Card. Best for businesses that rely on Amazon for inventory. The Amazon Business Prime American Express Card is designed for e-commerce businesses that regularly purchase from Amazon and AWS. If you use Amazon as a core part of your supply chain, this card turns that spend into real value. It gives you the flexibility to earn rewards or extend payment terms, depending on your small business's needs. Key benefits: earn 5% back or get 90-day payment terms on Amazon Business, AWS, and Whole Foods purchases with a Prime membership. Receive 2% back at restaurants, gas stations, and wireless services. Earn 1% back on all other eligible purchases. Upon approval, get a $125 Amazon gift card with an eligible Prime membership without any minimum spend required. Pay no annual fee, which helps keep overhead low. Drawbacks: requires an Amazon Business Prime membership to access full benefits. Limited rewards outside of Amazon and partner categories. Offers no bonus categories for digital ads or e-commerce platforms. This card works best for e-commerce businesses that purchase inventory, packaging, or business supplies through Amazon Business or AWS. If Amazon is a major vendor in your operation, the 5% cashback or 90-day float gives you flexibility that can directly support cash flow and margins.